That's right. Here we go with the earnings. We were pretty excited about. All of us were, no doubt about it. We're going to be talking about Nvidia today. Stock that's been up quite a bit, down 2% today after reporting earnings. But again, you look at the performance this year so far, and up 123%. It may be some of the reason why you see some downward movement. Just want to give that into perspective. Obviously, when the stock's more than doubled on the year, it's got a decent part of it. It makes a little bit more sense. Let's look at these earnings though and see what we have. So, quarter 3, non-GAAP EPS of $2.91, which is a beat by 36 cents, and a GAAP EPS of $2.12, beats by 43 cents. It's a really good top line beat. I mean, that profitability line is looking good. It's good to see a really good beat, especially when you're talking about pandemic times. The fact that they could post a profitability beat is pretty massive for sure. You got to take that as a win. And good companies just tend to always succeed regardless of the environment. That's just how it is. Revenue of $4.73 billion, up 57% year over year, which is a beat by $310 million. Pretty nice there. I like that revenue beat as well. I expected upwards of 50% year over year revenue. 57% is even better than what I expected. So really good to see on that aspect. So very good numbers. Adjusted gross margin of 62.6 versus a consensus of 65.3 is a little bit less than what they expected. Could be part of it for sure. And for Q4, they see a revenue of $4.8 billion approximately, an adjusted gross margin of 65.5, which is the same guidance they gave this quarter. And I don't know, maybe if that revenue they might think is a light guidance, and I think that's potentially why. I think there's a chance on that aspect for sure. Let's get these pop-ups out of here. Get out of here. Yeah, so that could be why people are seeing this as maybe a negative, because you'd expect Q4 really. I mean, this is mostly the biggest gaming quarter, no doubt about it. I mean, you can't deny that Q4 is the biggest gaming quarter out there, and Nvidia tends to benefit quite a bit from that. So, very curious on how Q3 is going to be very similar in results to Q4. So you'd hope they put up something close to a $5 billion number, but who knows? So let's see overall. Obviously, as we mentioned here, record gaming revenue up 37%, $2.27 billion versus a consensus of $2.06 billion. Really good there. And record data center revenue of 1.9 versus a consensus of 1.8. So really good there, up 162% year over year. And this is a massive, massive portion of the business. Data centers is going to be really overtaking gaming. Probably even next quarter. It'll be pretty darn close, but I do think since gaming pulls ahead in Q4 usually, most likely you won't see it overtake it until probably Q1 of next year. So really good numbers though. I mean, that's incredible numbers. You see professional visualization sales were down 27% on the year, but increased 16% on the quarter to 236 versus the 215 estimate. Automotive sales were down 23% year over year, up 13% quarter over quarter to 125 million due to a broad auto recovery. So down overall in the year, but now we're seeing some recovery on that aspect. Not a very major part of their business at all. Gross margin improved to 64.1 from 64.1 to 65.5 on the year. Good to see that. Operating expenses increased 6% quarter over quarter and 42% year over year to 1.1 billion, which is the consensus estimates for sure. Obviously, expenses have gone up as you see revenue rise quite a bit. You're going to see operating expenses rise typically as a result. The consensus for Q4 is only 4.4 billion, but they're expecting 4.8. Not too bad, all things considered. It's, in my opinion, a relatively low guidance for the quarter. I think they could do better, and I think maybe, or that consensus by analysts, maybe a softball estimate, maybe. We've yet to see on that, so I guess we'll take a look. We'll look at the press release as we like to do. We love looking at the press release. So let's take a look at this press release. Overall, as we talked about the revenue breakdown, nothing super crazy extra on that. Yeah, really cool stuff. Let's see. We're trying to find something that's actually necessarily, crazy. As far as info for us, I do obviously want to look at this net income line because, well, it's pretty big stuff. Q3 for fiscal year 21 here. You see overall, year over year is up 49%, so 1.3 billion compared to an 899 million number prior, and obviously quarter over quarter up 115%, which is pretty massive. I love looking at a net income line that looks like that. Really good numbers as far as that's concerned. I do, in fact, enjoy seeing that net income line from a non-GAAP perspective. Don't really care necessarily as much because I care more about the GAAP perspective. I really do. As far as data center, which is something we really like to talk about for sure, they share the news that Amazon Web Services and Oracle Cloud Infrastructure announced a general availability of cloud computing instances based on the Nvidia A100 GPU, following Google Cloud Platforms and Microsoft Azure, as I should say. So that's got a big portion of it, and obviously with these partnerships, it's really big for them, and it can do a lot in the future for them. Yeah, that's really cool. And obviously they announced the DGX Super POD solution for enterprise, which is the world's first turnkey AI infrastructure, expected to be installed by year end in Korea, the UK, India, and Sweden. Yeah, pretty cool stuff. As far as announcements, that's all I really wanted to mention there that I think is main stuff. They obviously have some of the announcements that they made in the total fiscal year, which I don't think are necessarily too crazy. They announced that Fortnite, I don't think it's the world's most popular video game anymore, right? Is it? I feel like it's been overtaken. It had to have. Will support real-time ray tracing, DLSS AI super resolution. So, again, the game's not necessarily one for looks, but they're going to be. I mean, you wouldn't think of it. Even games like Minecraft that add this ray tracing in it. Frankly, you can make these games look completely gorgeous, and I wonder what that does to a game like Fortnite. I don't know, but pretty interesting. Yeah, just wanted to really mention that. Nothing crazy on either. On professional visualizations, on automotive, they announced with Mercedes-Benz that Nvidia is powering the next generation of MBUX AI cockpit system to be featured in the new S-Class sedan. Augmented reality, heads-up display, AI voice assist, and interactive graphics. I don't know what that looks like, but we'll see. And that's with Hyundai, or Hyundai, as I'm supposed to say it. That the Korean automakers' entire lineup of Hyundai, Kia, and Genesis models will come standard with Nvidia Drive, in-vehicle infotainment system starting in 2022. So really big there. And Li Auto, which is doing a really good job over there in China, will develop its next generation of electric vehicles using Nvidia Drive AGX Orin. So for their autonomous platform, pretty big, honestly, all things considered in that aspect. So I am pretty excited for the automotive segment for them in the future. Nothing super crazy right now, but I think it will be big in the future. Now, if we look obviously at the balance sheet, which we love to do, overall, this is a 9-month comparison. So they're sitting right now at $14.3 billion in total current assets compared to $13.6 billion 9 months ago. So an improvement there. Most of it, as you can tell, is going to be in inventories and accounts receivable. Total assets in general of 26.8 compares to 17.3 for from previous, and obviously some of this is attributed to goodwill and intangible assets as well as other assets. So pretty good stuff, all things considered. That's a good raise in assets, and I'm curious on liabilities. Total current liabilities is sitting at 3.6 compared to 1.7. Not too bad. And total liabilities in general of 11.5 compared to 5.1. So it's not too bad, all things considered. You see, they rose assets by about $9.5 billion, but liabilities rose by about $6.5, let's say. So stockholder equity did gain quite a decent bit there. $15.3 billion in stockholder equity compared to 12.2 of 9 months ago. So I really like a company that not only in a pandemic is going to be performing well, but they're going to be boosting that balance sheet too in the middle of it. I really like that. Good numbers. I really like the balance sheet on this company. I do think you could say that it's relatively steeply valued. You're talking about a company with an annualized revenue closer to a 14 to 15 billion dollar number, trading at a market cap of 331. For that reason alone, I don't suggest buying the stock at these levels necessarily. At these levels, I much prefer it in the 450 range. I think that's a better valuation for it. I don't know if it's going to get there necessarily because the stock's on a tear, but that's my opinion on the matter, and I hope you enjoyed.